Hello and welcome to my channel, Hobo Joe Trades. I'm your host, Hobo Joe. Now, some of y'all have asked me, reached out, and personally stopped me on the streets asking, how do I know when to enter and exit a position? How did I learn this? And can you explain it in a simple and effective manner? And the short answer is yes. Yes, I can explain it in a short and simple manner, but everybody's plans, everybody's strategies, what's going to work for me the best and what works for you the best are going to be two entirely separate things. I could sit here day in, day out, show you my strategy, show you what I do, show you how I do it, and it's still not going to make sense to you unless you find your own niche. I have personally watched thousands of videos, just live streams, tutorials, web pages, articles, just read until my brain turned into mush. I watched as many videos as my eyes could allow me to view, and it wasn't beneficial to me. The way that I learn, which most of us will understand this one, is I learn by price. Let's just say that each experience that I've had to go through has cost me a fair chunk of money, and I know I'm not the only one when I say that experience costs. Experience costs a lot, but I am going to try to save you as much as I can and kind of give you some just simple ground, like the basic bare minimum of what you could do to start your trading journey. And this, for me, as you can tell and as you can see on my other videos, I'm a futures trader. I like to get in and get out relatively quickly and make a lot of money just as quick. Yes, that does expose me to losing a lot of money, but over the past 7 years of experience that I've had, I've made a lot of money, I've lost a lot of money, and between you and me right now, I'm flowing back into the profitable side of the bank again. Trading is just like these charts, as you can tell. Flatline, just be at a flat level. Bank account goes up, down. That's kind of how trading is. But once you can actually find something that suits you and fits you, it's not like that anymore. It is more of a learning curve. Once you've learned it and mastered it, you just go up. And it's seriously as simple as that. Don't try to hit home runs. Don't try to hit a home run every single day. Consistency is key. Consistency is the biggest thing and your biggest friend. Doesn't matter if you're making $100, $200 a day, $1,000, $2,000 a day, whatever you feel is comfortable and the best scenario for you and your living situation. I run multiple accounts. I make $100 per account. Let's just say hypothetically I've got 10 accounts. $100 across 10 accounts, that's $1,000 a day. You do that every month. You got 20 trading days in a month. That's $20,000 in a month. And that's just from clicking a button twice. Once to enter, once to exit. And that's how simple it is. When I was trading options and stocks, options were a little bit more difficult to find a strategy, and that's completely a different and irrelevant story. That'll be something later on I might do down the road, making a little video for. But stocks, you have everything that you need, from price action to supply and demand zones to trend lines. You got the VWAP, pivot points. You got everything that you need right there without any of these fancy indicators. And that's what I'm going to show you today. how to use them, what they are, what their purpose is, and all of my stuff is on the 1, the 3, and the 15-minute charts. I do not like to hold positions very long. I think today, just off today's trading session alone, my average hold time was 35 seconds, and I still made $2,700 today. $2,700 today across all of my accounts combined, and I'm perfectly happy with that. I'm perfectly fine with it. It's just simple when you actually sit back and don't try to overcomplicate it. Don't try to take in all the psychological warfare that the stock market is and has to offer. Get in, get out, make your money, end it for the day. Don't overtrade, don't over leverage. I'm trading 1, possibly 2 contracts at a time. I will enter with 1, and if I'm extremely confident on the direction that I go in at, and it happens to have a quick snapback or a quick pullback, and I just say, oh, you know what, I can average down or average up a little bit and be comfortable, be fine, because I know my strategy works. So, with that being said, don't overexpose yourself and don't try to hit these home runs, but let's get right into it. So as you can see here, right now we just have basic standard VWAP. See, VWAP right there. It's only one running. So this white bar is our VWAP, which, I mean, as a trader, you should know this. You don't got to know definitions or anything like that off the top of your head. You just need to know, hey, what is this little line for? What does it do? What is the name of it? That way, anybody ever asks you, or you ever have a conversation with a fellow trader, or you're watching a live stream and just hear somebody mention it, you can be like, oh, I know what that means and I know what that is. So for y'all who don't know what it is, the VWAP is the volume weighted average price. The easiest way that I learned this, and some might make fun of me, most might be like, what the hell is this guy talking about? So the way that I look at it is, it's a line drawn in the sand. And you got bears and bulls fighting back and forth, trying to get it over, get it under. It's like a tug of war match. When you're below that VWAP, you want to look for bearish opportunities. When you break back above VWAP, you want to look for these bullish opportunities. You come back, you kiss. This happened to break down, go back under, broke it, came back, kissed, ran back up, dropped. I mean, today, what is this? This was today. Today was an extreme tug of war match between bears and the bulls. Also, like I mentioned before, I'm a futures trader. Everything I'm looking at going to be related to the NASDAQ. That's my bread and butter. That's my bread and butter. That's my money maker right there. I am in the Central Time Zone. That's from 5 p.m. all the way up till 4 p.m. the next day. So my time, we just ended about 10 minutes ago, which gave me a good opportunity for this little video come in. So let's just go back to a random date. Don't even know what's going on. Eventually it'll catch back up. Let's see. That was the end of the contract. Completely forgot about that. I have a rolling contract. So this only goes back to July 14th, 15th. Let's just go back to one of these. So where is the day start? Oh, day start right there, July 14th on Sunday. You could see throughout the night, throughout the evening, we were well above the VWAP. We came back down. What time? Had these nice little spikes over it. This is all bullish opportunities. Even when it comes back down to the VWAP and kisses it, you see how it bounces off? What is that right there? Let's see some of those prices. That one, it kissed. What is that? That is 20,600. It came back up, jumped up 20,610. So that's a $10 hit. Now, if you remember, I told you I do one contract at a time. This moves at 25-cent intervals, which means I'm making $5 each interval. Each dollar has 4 intervals in it. So this alone right here, these little $10 movements, I'm making $200 swing up and swing down. You play it, each of these bounces, boom, 200, boom, 200. Oh, this one would have been, what's that? Almost $400. That would have been $340, okay? So boom, just in these 2 little increments right there, that could have been a $500 day. You have multiple accounts running, for math's sake, you have 10 accounts running, $500, that's a $5,000 day for you. That's how simple the VWAP is. The VWAP, you just wait for it to come back, kiss, boom. And we're on the 1 minute time frame, these happen really quick. You break down, how far is it going to go? You wait for that candle to close, come back, kiss, drop back down again. Come back and broke. Okay, it broke. See what the next couple of candles do. Oh, came right back down and broke again. You can be an aggressive trader, but you better hope that you are on the right side, because look, it broke up. You need to immediately decide, are you going to let it, are you going to be a bull? Are you going to be a bear? Is it going to reject, or is it going to break through? So in this situation, it broke, it closed, opened and ran up again, but 1 minute later came back down. The next minute did the same thing, broke on the downside, opened and closed lower, and then again came back up. It teeter-tottered a couple of times. You cannot solely rely on the VWAP, but you can play these little candles right here. When it wicks down, but it closes back, so it came down, kissed right up in there, gave a little bit of a nudge past the VWAP, but then came back up, closed, opened, and went right back up. These little scoops, you can comfortably enter in on a bullish position, and boom, that's a nice little run. That started at 8:59 in the morning, ended at 10:20, so an hour and a half almost. What is it? What's that price? $6.14 for math's sake to $7.96. Now that's $180. And if you remember, I said you're making $5 per tick. There's 4 ticks in the point. That's $20. So for every dollar this moves, you're making $20. So if you want to do that math real quick, what's $180 times 20? That's $3,600 in an hour and a half. You got 10 accounts, you just made $36,000 before most people even go on their lunch break. And that's why I trade. Now, realistically, you're not going to catch that whole move, but let's just say swing up, you catch it, or it runs comfortably up to here. You see this little pullback right here. You get scared out a little bit. You close out at 650. So what do we say? 614. What was it? Yeah, 614 to 650 for math's sake. Let's just say 650. It's $36 times 20. It's an easy $700. $700 in what? 10 minutes. Again, 10 accounts, $7,000 in 10 minutes. You go enjoy your day, you go rest, you go have fun, do whatever you want. I don't care. That's why I do this. Now we've seen a bullish scenario. Let's see the bearish. It's on a downtrend. It's running down. It breaks down. And it breaks down, tries to come up, does close, but that next candle right there goes back down, breaks and closes, and then it follows through on the very next candle. You always want to play these follow throughs. Let it run down. Came back up, bounced and rode that VWAP. That tug of war area right there is what we call consolidation. And you don't know what's going to happen or which way it's going to break. But just watch. Goes back down, comes back up, kind of gives it a kiss. Goes back up, gives it a little kiss again, and just drops. And just keeps dropping. Came back up, hours later, gave it a kiss, and boom. So that's the VWAP for you. Like I said, this isn't going to be a one and done indicator, but it does give you the general idea of what position you should be looking for. Now we're going to sit here and take a look at the pivot point indicator, which literally is just pivots. So this is more of a support and resistance type zone. As you can tell, I'm still in the 1 minute. I have mine color coded, green being support and pink, purple, whatever, being resistance. Kind of coincidental that green you want to buy, purple you want to sell. That's how I have it set up. This white line right here is the middle. This is like the balance, the equilibrium of it. This is about the zone of interest from here to the first level of resistance. That's a zone that you want to be bullish, anything above here. You want to be bearish, anything below this going down. So kind of like the VWAP. This is just a tug of war match. And as you can tell, this kind of bounces off there again. Boom, bounce, runs up, drops back down, comes back, magnetized back to this area, consolidates a little bit right here, bounces up, gravitates away from it, and then gets pulled right back in, finally breaks, comes back up, breaks, and goes back down and breaks, and so on and so forth. And then throughout the day, you have a couple more retest, support, doesn't break, doesn't fall. There were multiple times that you could have played, just thrown in a buy order right here, put it up for, what, 120? You could have thrown it up 950, 940. Look at this. Look at how quickly it just comes right back up. Hits 950, $30. What'd I say? One contract, $20 per dollar. $30 gain on the NASDAQ is a $600 win to your bank per account. So just something as simple as this, just watching it bounce. Now the one thing I do with this indicator is I double click on it. I like the classic view because that's just basic standards, simple. And this Camarilla view, this one actually gives a little bit more definition into which general direct. Look at these. Like this is the day before. This was Monday. This is today. But all those former resistance zones, they just got broken through. Once resistance turns into support, and by that I mean breaks. Let's zoom in a little bit. Breaks through the resistance and breaks through, comes down and consolidates or even bounces off that area of resistance. See, boom, came up, they push it back down, bounced back off, came back up, came right back down, but they couldn't get it down, so it bounced right back up and ran. Sure, came back down again, but look, resistance level turned back into support and ran it back up. So think of these resistance and support levels as, here's one, support that turned into resistance. Support got broken through, came back up, and then support now turned into resistance, pushed back down, came back up, couldn't get it all the way back up. So what happens? Boom, boom. Comes back down, another level of support that turns resistance, and it finally just crashes down. Boom, comes back up, can't get back through the former support that turned resistance, and smack back down. So that's how I use the pivots. And like I said, Camarilla or classic, traditional and classic, both the same thing. I just like classical things a little bit more my style, more my taste. But yeah, this one is You can throw it on the 15. Like I said, it gets a little jumbled up, but there's no. It's more for just drawing your levels. Just grab it, draw your levels, switch off a bit, and that's your pivot point for you. So my next indicator that y'all have probably seen me use a couple of times is a fair value gap indicator, and that is when there's extreme volatility or extreme liquidity in a general direction. And as I zoom in, you can see. So these green boxes is when an extreme influx of buyers swung in and gave the bears no chance whatsoever to even try to short the market. Sort of like right here, extreme case of bears coming in. No bulls could have stopped the bears in this little rally right here. Yes, this is 1 minute, but that's just what we're looking at for right now. And this indicator actually has a live, like a forward rolling feature, if you want to say so. Like this gap won't disappear off the chart until it's filled, and I think right there. Here, let's see. Nope, hasn't filled yet. But these little gaps are great areas of retesting, and if it doesn't break through, it's going to reject and run back the direction that it was first going in. So like this, it was bullish, bullish, bullish. Bears came down, just nicked into the gap, and turned right back around and ran back up. Same situation. Bearish, turned bullish, came back up into there, nicked into the gap, and went right back down. Now, there were some instances earlier on where the bears just gave no one a chance. So I don't really look at this one too often on the smaller time frames. I'll do it at like the 15 minutes, so you can actually just, here you go, pull little areas and just draw your boxes. So like that would be a box if it comes back down into there, which it did. So draw it on the 15 minute, switch back to the 1. Where is that little area at? Right there. So like in this situation, drew it 15 minutes there, it's disappeared, but that's where your box is because we just saw it on the 15 minute. Come down to here, it whipped into here, it never broke through, giving me some confidence to enter in the trade and let it just run its course, So enter in, sell, enter in, sell, enter in, run it up, sell. And that's simply all you have to do. It's just draw some lines here and there, I mean, shoot, yeah, you can overdo it. Don't ever let somebody tell you, oh, you don't have enough lines. Because, yeah, you certainly can overdo it. So, like this situation, 15-minute chart, again, you go draw your line. That's a gap from day to day. What? Friday to Sunday. That gap. Not trusting it in the very beginning of trading session. Not going to trust it. Let it run its course. Come back down. Came back in at 9:15 at night. Came right back out 9:45, and what did it do? Just ran on up. Never came back to see it again. And that's how easy the fair value gap is. That one's more complicated in a sense where you have to actually take your time to piece it together instead of just looking at it in a general simple view. Here we are with one of my favorite indicators, which is the supply and demand indicator. As you can see, it's relatively similar to the fair value gap, except that this one merits a little bit more detail, information, and overall more aesthetically pleasing with how it actually catches the whole bar for you. It extends everything for you and even goes as far to tell you what supply zone or what demand zone time frame this is. So think of it as a more sophisticated fair value gap. Now you can use one or the other. I wouldn't recommend using both, as they'll start to overlap each other and they'll start to just confuse you. You want to keep it simple. You want to make this as easy as it possibly can be for yourself, for your eyes, and you don't want to crowd your screen with a bunch of lines. I can show you at the end what I used to trade with and now what I currently trade with, but that'll be later on in the video. As you can tell, this is a 15-minute chart, so let's get down to the 1 minute. See these little 5-minute supply zones? There we go. Oh, so we came back up into the supply zone. We never broke it. Supply zone ended right there. Waited to get out, never got back out until a little bit later on, where a new supply zone was then created. And I think that's on the 15-minute supply. So let's go back to the 15-minute frame. And boom, it was this giant wick all the way to that wick. This is where the buyers seem... The former buyers are unloading their supply. This is where the short sellers are wanting to dump off. So your supply and demand is just like in Economics 101, and I will give shout out and bonus points to whoever can comment and list off the 4 basic laws of supply and demand from economics. One of my favorite subjects to take in high school. And then, this one's just super self-explanatory. There's really no other way than you got supply, you got everybody trying to dump it at this price up here, then you got your demand where everybody's trying to buy it at this price down here. Anything in between is just juicy and gravy. So, this is going to be a 3-in-1 indicator, and this is from one of our good buddies over at Lux Algo. It's called the Market Flow Trend Lines and Liquidity. So these liquidity zones, again, supply and demand, fair value gaps, just high interest areas. These trend lines, what you see as a green line and the red line. On the 1 minute chart, it all looks like a bunch of cluster and nonsense. You spread it out to about the 3, the 15 minute, it actually starts to become a little bit of a clearer picture. The way that I can explain this one is, this is an indicator which can be used by itself. This one can, and I have used it quite a few times in my videos strictly by itself. These trend lines, anybody can draw them. Anybody can draw them on any time frame they want. You don't have to have an indicator for this. I do it just for simple sake's purpose, So let's just look at this green line right here, okay? When the price crosses this green line, this is a downtrend line. Don't let the color confuse you. I have it color coded to indicate when it crosses that line, what color do I need to buy, or what color is it, so I know if I am longing it or if I am shorting it. That's how I have my stuff color coded. Green means green button, red means red button. As simple as that. This is the 13 EMA in it. This EMA is like a quicker reacting VWAP. When it's above it, you want to buy. When it's below it, you want to short. And these liquidity zones, as I mentioned earlier, these liquidity zones are just your supply demand, super simple, super easy. But in this situation, like I said, green, you buy it, red, you long it. This red line is for the uptrend, which means when that trend up is broken and it's coming down, you can feel comfortable shorting it on the way down. You have to pick your exits, but this will give you your entries that you are looking for, that you're wanting. go back down into the 3-minute, a little bit more zigzag, a little bit more chicken scratchy. You can go in here and tweak with the settings all you want. I really don't mess with it too much. I mean, the slope is the angle at which you want the threshold to be crossed, and sometimes each day is different. So I just like to keep the bare, basic, simple settings. 8-1 chart, okay, and that has worked for me. Look at this one. So here, green line. When it crosses up, I'm entering about right there, no later than when the candle closes. Okay, so boom, up, done. Grabbed it, and 1 more minute, and a couple more minutes, and boom, right there, $20,085, and you entered in at roughly $993. So what's that? $993 to 84. That is $91. Again, $91 times $20 is $1,820 you made to your back pocket, holding for a maximum of 10:06 to 10:18. In 12 minutes, you just made almost $2,000. Okay? That's how easy it is. Just something like that. And that's $2,000 per account. I'll make up another video to where I can show you how to copy trade, which is what I do. I've got multiple platforms and multiple accounts across each platform. And me comfortably, I like trading 3 to 5 accounts at a time together. There's some prop firms that actually use their own platform and their own web-based platform that they've created, and I do not like copy trading on that one. Once they fix the bugs and kinks, I'll get that squared away and maybe start copy trading on it. But right now, between you and me, Tradeovate and TradingView are my two go-tos for copy trading, and I will trade, like I said, 3 to 5 accounts, just depending on what I feel like. My risk management is very high, and I enjoy trying new strategies. I enjoy trying new things, and of course I have my go-tos. I have my indicators that I'll just use tried and true over and over again, and I'm fine with making the consistent money. But you need to adapt. Everybody needs to adapt at any given time. The market can change, this, that, and the other. Everything changes. The only way to survive is by adapting to new situations, and that's the thrill that I get. So, like I said again, Lux Algo, great company to work with, great people who've helped me out tremendously, and ones that I actually help out, helping them code and program some of their indicators and not platforms, some of their web-based material. This might be one of the most common indicators you've seen me use. This one is one of my tried and true indicators that I will go to probably till the end of my trading career, until somebody figures out a way to absolutely destroy it. But I don't foresee that coming anytime soon or in the near future. This one is called the EMA crossover, and my EMA crossover, I personally have it set to 13.3, and we can see that right here. Now, this indicator, I just wanted to show y'all something with this, okay? I have my parameters July 16th to July 20th, all right? Trading prop firms, trading one contract at a time. Simply long it when it crosses up, short it when it crosses down, okay? Simple as that. On the 1 minute, on the 3 minute, on the 15 minute. I mean, you can do this on any time frame. Me personally, like I said, I scalp. I want to get in, get out. So I'm doing this all on the 1 minute. I'm going to show you what a week of backtesting does. And I'm also going to show you, this is how much I start with. I start with $50,000. I use one contract at a time, okay? All my other parameters are the same. Recalculate. This is if you want to immediately reverse. So, like on this crossover right here, I had a short position. And when it hits the cross up, if I have after order is filled, that would show if I hit the reverse button, which would close my short position and immediately open up a long position. So just like the name says, it's reversed. But not everybody can do that. I really don't like reversing it. Like I said, I scalp, I get in and out. I'm not going to play every single crossover. I just wait my couple of minutes until I see something that I like and then play it. This crossover, this bullish run right here, that would be enough for me to have a good day for the rest of the week. You know, do this one day, once a day, every day of the week, 5 days, and you can easily, comfortably make a nice living. So, without further ado, here is some back testing. Like I said, one contract, $50,000 what I start with. I change the colors a little bit because I like those colors. Input for 1 week, following the crossovers, trade direction both ways. No ifs, ands, or buts. Click OK. Strategy tester. There's your money right there. Proof is in the pudding right there. Back testing for 1 week, $8,500 per account. 10 accounts, $85,000 for the week. Max drawdown, $5,500. Your average trade, you are making $23 per trade at a 1.2 ratio, 30% profitable. Okay. Number of bars in a trade, 12. That is 12 minutes at a time. Okay. That's your average time. Okay. That is insane. Now, like I said, if you want to do the absolute revert, like the reverse button that I was telling you about, watch this. Watch your profits. Jumps up to 19,000. That's 190,000 with 10 accounts in a week. If you sit there and hit every single trade, reverse every single time. Okay? Your max drawdown actually drops less. You have a 1.6 to 1 ratio. Your average trade is $51 profit, and you are 34% profitable just by hitting that reverse button a couple of times, okay? So I don't know about you, but between you and me, if I just even make one crossover, let's just say 1 minute time frame, one crossover right there. Okay, let's just see. We're at 958. You sell it out when it comes to this cross down right there, 958 to 20,062. That is $104. That is 416 ticks. That is $2,080 just off this indicator. This is one of my favorite indicators. It is called the EMA cross, and I will stand by it and use it every day until my trading career is over. So here's another indicator that most of y'all have seen me use before. This one's called the Supertrend. And as you can see, it tells you when to buy, when to sell, and when to take a short position. The market these past few days has been wild, it's been crazy, but overall, you're not caring which way the market's going. You just want in, run it out, maybe even run it again. You catch the bullish run, you catch the bearish run, you've had a pretty damn good day for the day, This one, I'm just going to show you again. This is the Supertrend strategy. I have mine for the 1 minute, which is what I trade on, set to 7.2. Now, here's the thing. This was just, let me see if I showed it to you. Where was it? Style, no properties. Nope. Inputs. Yep, inputs, that's what it was. I have it set today or yesterday's date to today's date, market to market, okay? Just following this, one contract at a time, strategy tester, made a cool $1,500, 41% profitable, 1.1 to 1 ratio, average trade $14, number of bars, you're in there 22 minutes. This is pretty simple. It does tell you when to get in, when to get out, and you have to use your better judgment on these little consolidation points, and that will come over time. Okay, that does come. No indicator's gonna be able to avoid those. You might be able to tweak with some settings here and there to catch it and get lucky every now and then, but you are gonna have to keep tweaking the settings day in, day out. I'm trying to give you the basic, most simple, generic deals that I use and what has proven to have worked for me. This is called the Supertrend, one of my favorite, one of the ones that I first started with back when I was just trading shares. Used it and started implementing it here in futures trading, and it's stupid self-explanatory. There's not much else I can do. You buy when it breaks, and you see this little green. When it flips from a red to green, you buy. When it flips from green to red, you short it. That's as simple as that. It can't be any more self-explanatory. Little cheat sheet for you though. If it's running down, it comes back and kisses, it doesn't break, it's going to drop again. It's going to bounce off. Same with on the uptrend. Uptrend, boom. These are your re-entry points. When it touches these support and resistance lines, treat every line that you see on any of these indicators as support or resistance. Yeah, it'll break it for a second, but wait for it to actually close. If it closes back up, you're good. You're Gucci. Run it up, re-enter, go. Run it down, let it drop, collect that bag. So there you go, guys. That's kind of the general indicator selection that I use. I just try to keep it simple. That's the easiest thing, and that's the best thing for you to do in this market. It's already going to drive you crazy enough trying to figure out why things are happening, or what X is going to do to Y, or what is A going to do to B. This market is crazy. There's not enough answers, and not every question that you have is going to have an answer. This market is going to do what it wants, whether you like it or not. It doesn't owe you anything. You just have to adapt. You have to just go in, fight the beast, make your money, and know when to quit. For those of y'all who play poker or know how to play poker, know when to hold them, know when to fold them. It's as simple as that. It's as easy as that. Here pretty soon, I'm going to start just doing live streams. Once I get enough people that are actually interested in it. Right now, I've got a handful that actually watch me physically in person do it. But I want to branch out and kind of help the general public out and give everybody else a taste of what this type of financial freedom can do for you and can give you. This is something that I've always been interested in, and yeah, it's cost me a lot of money to learn everything that I have, but at the same time, I've made back more, not just value wise, like not just the money wise. I've made back more than what I've lost, but the experience, so that I can pass on my knowledge to my friends, family, anybody else who's even curious about it. I'm not trying to sell this. I'm not trying to make money off of me making money. That's not what this whole thing is for. This is to give the people of the future and people present right now something to kind of learn and base off of. I'm always open to questions. If you have any questions, just hit my YouTube up. Just post up a question on any of my videos. I'm going to see it. I'm going to do my best to respond to it. If I start getting the same question over and over and I'm not explaining it well enough, I might just make a video for you and just say, hey, this is the answer to the question that you have, and boom, everybody else might be able to get some type of knowledge out of that answer. And like I said, I'm going to start doing this live, so once I'm live, y'all start watching me, y'all can ask me questions in real time, and I'll be able to pay attention to it and answer it right then, right there, and I'd be able to hopefully have y'all mimic what I'm doing. And like I said in the beginning, there's no one shoe fits all. What I do might not be part of your strategy, and what you do, you might have a different strategy than me, and that's okay. Everybody has their own way of learning, and everybody has their own rules to follow. You just have to make sure that you are following your rules. I have blown plenty of accounts up not following my own rules, thinking that, oh man, if I just chase $50 more, I've made $5,000, and turn around and lose the entire $5,000 because I'll dig myself into a little hole and just let the emotions take over. Get in, get your money, get out. You'll have your home runs. You'll hit your home runs every now and then, and those will feel good and great. Don't get accustomed to them. And don't let yourself chase it all the time, okay? Wait for it to come to you. The market doesn't owe you anything, and the market will always be here tomorrow. On that note, peace out. I'm going to go make some afternoon trades. And for my next video, I'm going to kind of talk about my price action strategy. I wanted to make this video strictly for my indicator side. Next video is going to be the price action, and that's going to be like your structure for your candlesticks, where your levels are, how you can visually see support, resistance, rejection zones, how you can draw your own trend lines and figure out where and when to enter. And I might even do some live trades and just post them up into the video for y'all. All right, so hopefully y'all learned something from this, and please just watch my videos as much as y'all can. Try to learn from them. Try to learn anything you can, and share it around. Spread it around. I'm also going to be posting up some of my stocks that I watch in the mornings that I just kind of buy. I'll just buy it, set it to a sell limit of like 50%. So once it hits 50% profits, just sell it. And that's pretty much what I do. I just sit on those and don't actively day trade them as much as I do the futures. But on that note, I'll see y'all, and hopefully y'all check out my live pretty soon.